Alright, I'm going to go through some steps here on how to trade the NQ 4-tick range. Now, the first thing that I'm going to do is I'm going to show you how to trade it with no indicators on your price. Alright, you can trade it without even looking at price. Now, this is going to take a stretch of your imagination a little bit when you're actually doing the trading. There's a couple things that you need to know about this. Using just the slingshot, alright, you can trade, this is the NQ 4-tick range. You can trade the NQ 4-tick range using just the slingshot without looking at anything on price. Now, I'll go over some more stuff with regard to price in a few minutes, but there are two ways to do this. Now, let's start with the simplest way first. Okay, I'm going to take all the things off of there that we don't need. Okay. Here we have the slingshot with the only things that are on. The green line is the S1 fast on. You need to set that to true. And the brown line is the S3 fast on. You need to set that to true. Okay, I'll show you the properties here in just a moment. Here we go. Okay, the two things that are set to true are this one right here and this one right up here. Alright, all the other stuff you can just leave alone. Now, without looking at price, I'm going to pick out some spots here where it's just a total momentum trade, and it's good, usually good for a quick 5 to 6 ticks. Okay. I don't know what price looks like, but I'm gonna say right there, price was moving up, and you had an opportunity to enter. Right here, and probably right here, price was moving down and you had an opportunity to enter. Right here. Yep, right there. Price was moving down and you had an opportunity to enter. And this is just random stuff. I'm just randomly picking these. I'm not cherry picking anything. Okay. There's one particular thing that I'm looking for here. And when it happens, that's when you're looking to get into the trade. Okay. Yeah, might have been one right over here as well. Oh, that one probably didn't work out so well. Let's see. Probably right here. And right here. Okay, now you see what I'm trying to do here for you is to simplify the process. Remove all the stuff that might make you have some sort of indecision and just trade with the minimum stuff that you need to put a trade on. Okay, now let's just go with that. Alright, I don't know what it's going to look like on price, but let me explain to you what I was doing. Let me see if I can remember how to do this. Spread them out like that. Yeah, that spreads them out. Alright, what I'm looking at here is the slope of the brown line. Brown line sloping down. The green line pulls away from the brown line and then turns back down in the same direction as the brown line, while the brown line is still sloping down. Alright, so the green line diverges from the direction of the brown line, and then it turns back into it, while the brown is still sloping in the same direction. Okay? Now, your entry is going to be at the close of the bar that makes this green line go down. Okay? So, in this particular case, I don't know, I didn't know ahead of time what it would look like, but the close of this bar, so your entry is right here. Alright, you're going short right there. If you look over to the right, that was 47.25. It did pull back a tick, so you could have entered for sure. And it dropped down to 45.25 for a 2-point gain. And that took 10:51.47. It took about 3 minutes for a 2-point gain. Now, 2 points on the NQ, not a lot of money. It's 8 ticks. It's $40. But you know what? Once you get used to doing this, if it's 8 ticks at 40 bucks with 10 contracts, it's 80 ticks. So it's 400 bucks. And just look at how many times we did this. Okay, we had one right there. There was another opportunity right here, but you would have still been in this one probably. But if you chose to do it, then you could have done it here as well. But the next one was right over here. Again, the same exact type of thing. You saw I didn't know what price was doing, but your entry would have been right there. And that was another one. 47.50 dropped down to 44.50. That's 3 points. 12 ticks, 60 bucks. Okay, that's $60 per contract. So you got 40 here and 60 here, and that was a half an hour, not even 15 minutes. So that's 100 bucks a contract. 10 contracts, that's 1,000 bucks. Okay, one contract, it's 100. But you can work your way up. The NQ is pretty easy to deal with. Now, I'm just scrolling over because I don't know what price was doing on any of these. But again, same thing right here. So your entry on this one would have been right there. Alright, you would have had to have made sure to get your entry on that one. It didn't pull back, so you would have had to have been a little more aggressive, probably getting in at 49.75 instead. Right, and that went from 49.75 all the way down to 46.75. Another 3 points, another 60 bucks. Let's just move over those. Is that all I did? No, I did some more. Okay, this one right here, I said this is the one I said I didn't think was probably going to make any money. And this is where we'll go over the risk on the thing. Okay, you see how the green turned down into the brown right here. The brown was sloping down. Now when it does it down below the 50, you're not likely going to have as good a results as you would if it did it above right here. You see this, the 50 line is the horizontal line right here. It's really, really faint. I can make that a little easier to see if I can somehow get to my properties. Here we go. If I turn the bias on, there. Okay, that line, that red and green line. If it happens at the red and green line, or pretty close to the red and, or above it for the shorts, or below it for the longs, you're more than likely going to have a better trade, okay, than if it happens, like on that one that I just showed you that didn't go anywhere. This one right here, it was pretty well below it, but, it didn't go anywhere really. Now, how much are you going to risk on this? Well, your risk just needs to be above this candle, okay? So if you got short in here, let's say you got short, the bar closed at 34.75. Let's say you got short at 34.50. Your risk just needs to be up here above this, so 36. So you have 6 ticks risk on this. I usually use 8 ticks risk on all my NQ trades. That's 40 bucks, but 6 ticks risk is only 30 bucks. Okay. So, you can choose what suits you the best, but usually if it's going to get up above this bar, the one that got you into the trade, this is a momentum trade. It shouldn't be going back up above it. It should just start moving as soon as you get into the trade. This one here, you can see it went sideways quite a bit. You had an opportunity to get out of it at break even a couple times. You would have stopped out if you didn't. Okay? Simple as that. I don't think oh yeah, I guess I did do a couple more. This one here, you would have been getting long. You would have been getting long right here. 42.75, and that one went up to 44.50 for 7 ticks, which is $35 a contract before it pulled back down to your break even, and then it went up to 45.25. Now let me just show you where you would have been getting in, right there. 45.25 for 10 ticks, I think. The next one, a shorting opportunity. You would have been looking to get short right here. Now again, your risk just needs to be up above this candle. Okay, there were 2 of them right here. I figured they were probably going to be all in the same trade, but you would have been looking to get short here at 44.25. You can see it dropped down to 42.25. So there's 8 ticks right there. Another quick 40 bucks. Okay, that's one way to deal with it. That's one way to take a trade and do it without having anything up here on the actual chart. Now I'm tempted to give you another thing to look at with the slingshot, but I really don't want to complicate it. I want you to take a look at this first, and maybe I'll make another NQ video over the next couple days. But let's just start with that, okay? Now, if we move the price away like that, now you see right here the brown is sloping up, the green moved against it but back up. Now this one is above the 50, so it may work out okay, but it's not ideal. Okay, we'll stick a line right on there for you. Again, right here and here, but it's all these are too far above the 50 for me to really like them. Because when it starts moving that far up, well, there's a pretty good chance that it's already run its course. Let's see if we have any other ones in here. Here's one right here. Well, that was questionable right there because it was way down below the 50. Let's see, over here. Yeah, this one was okay, but the brown flattened out. So that's not ideal either. Let's see. Here's one. Right there. And that was followed up right over here. And that's not ideal either because the brown was moving up. And it flattened out there. I mean, I'm guessing that this probably worked out okay. Let's just take a look. Yeah, if you had your stop up above here, you entered here, it dropped down from, 35.5 to 34.5, so you had 4 ticks profit in the trade. Yeah, if you had your risk at 6 ticks, you would have been okay. You would have had to endure a bunch of stuff here. You would have been okay, though. But that one was alright. Now let's move over here a little bit more. Where are we? Oh, we're at 3 o'clock in the morning. I didn't even realize that. Oh, for you, that might be okay. Oh, for you. I'm creating this for a partner in London at the moment. Alright, but you see here's another one right here. Not right there. Sorry, that's not good. That's bad. Now we're getting into the next day right here. Alright, you see things start really shaking up right in here. This isn't ideal because it's below the 50, but it looks like it's probably going to be okay. I don't know. Let's have a look. Yeah, it gave 4 or 5 ticks anyway. Nope, it started moving away. This one right here, it's right at the 50. Let's see about that. Yeah, that dropped down about 6 or 8 ticks. Over here. This is above the 50. Again, not ideal because it's above the 50, but it tapped it and started moving back up, and you can see that went up pretty well. And that's it. So, again, what you're looking for is the brown to be sloping, the green to move away from it, to diverge from it, and then to turn back into it while the brown stays sloping. Okay? Like right here. Again, this is below the 50, so the thing about it being below the 50 is you're just not going to have as much run room, usually. Now this one worked out okay, 43 1/4, and it dropped down, let's say right here, to 40 1/4 for $60. And it's pretty straightforward, pretty simple. You don't need to be confused with all the stuff up on the charts. That's the goal. Okay? I'm going to shut the recorder off right now, and I'm just going to put this one out on YouTube. Alright?